So wonderful. Good afternoon, good evening, hello, and good evening all together. I'm really happy to have you here in our event here from Trading Live. I'm really happy we had this week the ceremony in Dubai. I guess in Dubai or Abu Dhabi. I guess in Dubai, and it was a great event. And now I'm really happy to be a part of Trading Live here on Friday afternoon. Again, maybe this is watching someone as a video, then you will see how I trade. I'm a trend follower. I'm Marcus from DowHow Trading, and I'm really happy to share my knowledge and my trading ideas with you. I'm a trader who is trading with pure logic and with clear rules. And my partner this afternoon here is FXview, and I'm really happy to have a great partner here on my side in this webinar. So in case you are a real trader, then maybe you can type in the chat box what's your name, where you're coming from, and I'm looking forward to see this in the chat. Of course, you have the chance to ask me whatever you want. We can make analysis, trading analysis. If you have any charts, we should have a look on it. Then please feel free to ask. You can use the chat. Okay, and by the way, I can see if there are bots or robots. So in case you're a real trader, then please get in touch with me directly. Okay, FXview, my partner. Let's see, we had, let's see about economic calendar. So that's what I want to have a look with you. And we had non-farm payrolls this afternoon. We had a couple of rate decisions this week. We had the Fed this week. We had the Bank of England this week, and 30 minutes ago we had the non-farm payrolls. I show this here on my financial calendar. It's a little bit easier, and here we go. Non-farm payrolls. So you can see the forecast here, non-farm payrolls. That was the numbers. So that was the previous one, 333K. That was the forecast, 187, and that was the actual number, 353. And that's big different from the previous one and far away from the forecast. So there's no, we should not wonder that the market have a huge impact about euro dollar. The dollar gets really strong this afternoon, and this had a huge impact to many other trades. So, and this we will figure out in this show, in this trading live event this afternoon. Here we go. That was the wrong one. Sorry. Okay. Just a moment. Okay. Good. So we want to go through a couple of charts. I'm here. We are my friends shared link. Thank you very much. So maybe you can type where you come from. There, it would be really nice to know that. Okay, before we start, I want to share this with you. Just a sec, please. Okay, so here we go. So if you're looking for a cool partner, for a cool broker partner, then please try this FXview, FXview.com. You will see we have great opportunities, experience, excellence in every trade, immediate deposit, $200, spreads almost zero, trade winning awards. We have act trades, MetaTrader 4 and 5. You can use whatever you want. We have the app. So, and of course, news wherever you want and whenever you want. So you can see you can use this as much as you want. Okay, I want to start, as always, with my quote of the day from Bahrain. Thank you very much for spending your precious lifetime with me. If you have any questions, so feel free to type in the chat box. We can talk about everything. Okay, trading is a cruel kind of job, driven solely by folly and misunderstanding. So we had this afternoon a great example, and especially in euro dollar, we had this week. I had, for example, I want to show you this, 6 losses in a row. And if you see our non-farm payrolls this afternoon and how the market is reacting on that, then we can see trading is really cruel. It's a real cruelty and a really rough and tough job. So, and if you don't know what you have to do in trading, then you are driven by folly and misunderstandings. And there is really many misunderstandings in trading, and this we have to figure out. Yeah. So, and as you know, our topic for today, the question of today we want to clarify a little bit is why all webinars are completely useless, even mine. And I want to show you why this happens, why all webinars you get free are completely useless. And I want to explain you why. So before we do that, first of all, we have the, sorry, that was not the right one. Here we go. So first of all, the risk disclosure that you are responsible for your own trades. So, and then that you know how I see the charts is, that's my strategy. And the first thing what you have to realize in trading is that in trading only just one strategy is working, only one. And we don't have to mix, and we must be careful that we don't mix strategy with rules. Different. We have different things. So first of all, what you need to know is that the only part how to make money in trading is buy cheap and sell expensive. That's the only way how you can make money with trading at all. It doesn't matter if you trade euro dollar, or if you trade a share, or if you trade an index, or if you trade a cryptocurrency. It doesn't matter. If you are a trader, there's only one strategy how you make money. Buy cheap and sell expensive. Or in trading, we can do different. Yeah, buy expensive, sell expensive. Just a moment. The difference here is that you know that there's only one strategy, and it's different to rules. Yeah, so don't mix that. Buy cheap and sell expensive. So, and one of the strategies, and this is the reason why we say success is a formula and it's not a fantasy, which means trend following is always the point: buy cheap and sell expensive as much as possible, or vice versa in the opposite, on the short side. Yeah, if you go long, it's buy cheap, sell expensive. If you go short, it's sell expensive and buy back cheap. So that's the only strategy. And think logically, really think logically. And this is the problem why all webinars are completely useless. If you don't understand what is the job of a trader, the job of a trader is really simple. Yeah, the job of a trader is really simple. It means you have to buy cheap and sell expensive. if you have a normal job, I don't know where you live right now, maybe Bahrain or wherever you are, and you have an own shop, flower shop, burger, something to eat, then you will know this. As a trader, the owner of the shop, you are a trader. And that means buy cheap and sell expensive. If you sell pizzas or burger or flowers, something like that, then you know you have to buy them cheap, add your money on it, and then you can sell expensive. And the difference between the price you bought it and the price you sold it, it's your money. And exactly in trading is exactly the same. Yeah. So, and here we go. Now, this is the strategy: buy cheap and sell expensive. And that means trend following. And now we need to know exactly when we have to go in and when we have to go out. And this is another reason why all webinars you get for free are completely useless. Because if the trader cannot tell you exactly the rules when you have to go in and when you have to go out, then you cannot duplicate it. You cannot repeat it all the time. But in trading, you know, it's a game of mathematics. Trading is a simple, really, really simple zero-sum game. If you want to buy 2 shares, you need someone who wants to sell 2 shares, for example. If you want to buy 1 future contract, you need someone on the other side who wants to sell 1 future contract. At the end, it's 0. This one has 0, you have 1. If you sell it, you have 0, the other one has 1. It's a zero-sum game. So, and the only chance is if you bought it cheaper, then you can sell it. And then you will sell it. That's the only way how you can make money with trading. It's a very interesting thing. So and now we need the rules, how you can make money. So that's a strategy. And now it comes to the rules that we know exactly when we have to go in. Exactly when we have to go in. So, and therefore we have 4 rules. We need a valid trend. What is a valid trend? A valid trend is a move and a correction and a second move, which is higher than this one. This is a valid trend. Or I give you a clear description. A valid trend, 4 notes and 4 remarkable sentences. A valid trend consists of a movement, a correction, and another movement. And the second move must exceed the last high or low with 3 closing prices with or without a TST. This is deeper acknowledge and deeper education. We need 3 closes in a row, and the color and the appearance of the candles are not or doesn't matter or not crucial. So that's the different, or that's the description of a valid trend. And then of course, if you have such a valid trend, then the entry is always between number 2 and 4. Anywhere in this trend, number 2, 3, or 4, there is your entry. And then the correction has to run at least 38%, and then you make an entry anywhere between the correction and the last and the trend continuation. Anywhere here you make your entry, and then you are speculating on a trend continuation. And that's the 4 rules. And with those 4 rules, you always know where you have to go in. And you know you have the mathematic on your side. Then again, this is the mathematical probability that we see this trend continuation. This trend continuation has a probability between 65 and 72%. The earlier you come into the trade, the higher the probability. The later you come into the trade, the less the probability, but it's always over 50%. So a trend continuation system is always profitable, and you have always a positive expectation value. Which time frame do you prefer for analysis? It's not something you should prefer. Here is also the same point. Think logically. If you understand that trading is a game of mathematics, of probabilities, then you will realize that you cannot afford to lose or to miss any signal, because probability means you don't know, and this is very important, you will never know in which row the positive and the negative trades will come. You will never know that. You will never know that. That's the problem, or that's the challenge in probabilities. That you don't know in which row, in which order the signals come. If the next signal is a plus or a minus, you will never know, because it's probabilities, and the order the signals show up are driven by accident, by coincidence. So, and that's the question, or that's the answer to your question, which time frame? It must be a time frame you can catch every signal. So if you are a part-time trader and you don't have time to sit in front of the computer all day, then you cannot be a day trader. Then it's not possible to trade in 5 minutes or in 1 minute or in whatever there is. Because if you just have 2 hours a day, then you will miss most of the signals for the rest of the day, which means you must prefer a time frame, maybe 4-hourly chart or 6-hourly chart or maybe daily chart. You will never miss a signal. The positive thing is, the higher the time frame, the more products you can trade. And the lower the time frame, the less products you can trade. So if you want to trade 1 minute or 5 minutes, then you can just trade 1 or 2 products, DAX or Dow and Euro Dollar, for example. But if you trade daily chart, for example, then you can trade 15 or 20 products, the major pairs, maybe some indices, and maybe some commodities. Then you have more products in your shop. So it's not to prefer a time frame. It's the time frame you can handle with your lifetime, with your day-by-day time, if you're a part-time trader. If you're a full-time trader, then you can trade. Then you should analyze and follow your signals in the time frame you want to trade. So you see, that's things no one will tell you in any webinars, because that's the pure logic in trading. And the development of a trader is running in concentric circles. And this is what I want to explain you a little bit later. Okay, so this is the strategy. Strategy is follow the trend, and entry, that's the 4 rules. What's other rules, for example? Other rules could be possible if you say, okay, I want to trade, for example, with moving averages. For example, you have rules, maybe the 50 is crossing the 200, then that's my entry, and when it's crossing on the other side, it's my exit. The same principle, buy cheap and sell expensive. But the most important part is you need to have rules for entry and exit, that you always know what you have to do, when, where, and how to do when, where, and why. Because only if you can answer those questions, you can control your emotions. So, and with this in our mind, we want to go to a little bit the charts. So now let's go through the charts a little bit, and we start, for example, with Dow Jones. And that's an example of a lovely and perfect example for trend following. As you can see this, we are in 11 trend arms. Yeah, in 11 trend arms. You see, this is a perfect example of trend following. Yeah, and if you follow the rules, then you can see, okay, that was my second trend arm, my entry was there. And if you just follow the trend, then you trail your stop loss always when the correction is done. When the correction is done, then you follow. And then you see, okay, look, there was my entry and there was my exit. Huh? And even the trend is going on, then you can make a re-entry and go in again. And you follow again the price. Huh? So you see, this is a perfect example for trend following in Dow Jones. But now, you know, we have to make a decision when it comes to the right edge of the chart, because we have to make a decision here, the right edge of the chart there. Now you need to make a decision. Should I now buy or sell? And exactly for that, you have the rules, and we have the 4 rules. The entry must take place between trend arm number 2 and 4. Look, this is trend arm number 11. And if you're not a part of this trend, you cannot enter if you trade with trend following and with the rules. So that means nothing to do. No entry, nothing. Not long, nor short. Neither long nor short. Nothing. Very important. Otherwise, you have any other rules. But then you know, if whatever you have for rules, they must be proven by mathematics and not only by just a feeling. Yeah, don't forget that. Okay, let's come to the next chart. For example, very, very important. Yeah, very important. Look, this is Australian dollar, US dollar, and we have trend arm number 4. So you see what you can do. We have 2 trends, the downtrend, and that were the non-farm payrolls right now, which means we were in the correction in trend arm number 4, and that means here now maybe there is my entry. Yeah, and now you have the probability again of roundabout 70% that this trend will continue. Yeah, so therefore there is an entry to speculate on a trend continuation. If this will happen or not, it's not my job to judge. It's not my job to evaluate. My job is to follow the rules, and when the trend is running or when the trade is running, yeah, then I have a trade management when I want to go out, for example. Yeah? So, and for my exit, if this is my entry, I use, for example, a moving average like a 20 DowHow, a 20 line. And the 20 line follows the price also. And if I have a price above the 20 line, yeah, then I cut the trade. And even I'm in profit or I'm in loss. We will see. So this is a wonderful example where I would make an entry. Yeah? And this takes place exactly here. And now this is a lovely example why I have chosen this quote of the day. If you remember this quote of the day, trading is a cruel kind of occupation or job, driven solely by fear and misunderstanding. Why is this? Look, I had 6 losses in a row in the last 2 weeks. 6 losses in a row. 1, 2, 3, 4, 5, 6. 6 losses in a row. And this is the interesting part. Even I'm a trend follower. Yeah. Even I am a trend follower. Yeah. So, and that's the point. This is really annoying. This is frustrating. I was speculating that we come from trend arm number 2 to trend arm number 3. And even this happens at the end, I had 6 losses in a row. How can this happen? How is this possible? Yeah, now it's an interesting part. Now you look into the history, you look back. But when I made the decisions to buy and sell, I was at the right edge of the chart. And at the right edge of the chart, you will never know what's going on. Yeah, I will show you this a little bit closer. Yeah, so for example, yeah, look. So we go there. So you see, that was the right edge of the chart. At that moment, the correction hit 38%, which means my rules were there. And there was my balance candle. So there was an entry. At that moment, I was at the right edge of the chart. I had to make a decision based on my rules. So what happens? Yeah, the price went down and I said I trail my stop loss bar by bar. Yeah, because I want to see if the price is going down or not. I don't want to have a high risk. I trail my stop loss bar by bar. So, and what happens? Look, nothing. The price didn't go down, come up again, and I cut the small loss. Huh? I don't want to have huge losses. I want to have small losses. Why should I keep the position running when I can see it's not going for me? Why should I keep it running? I have to cut the loss immediately when I can see, okay, the price is not going down. So first loss. Yeah. So now I have to wait for the next balance candle. Again, I have to wait for the rules again. So let's see. Okay. There was a balance candle entry, yeah, because the price didn't go down. So, and look, there was the next balance candle. There was my entry again. And what happens? I trailed my stop loss immediately to the candle and I get out because I can see, oh, the price is not going down. It was just the probability, not the guarantee, that we see at that moment a trend continuation. It's just a probability game. So that was the second loss, but a small loss, always a small loss. Yeah. So then I made the third entry because the price turns around here, change the color on Heikinashi, and I make the next entry. Yeah. So then I trailed my stop loss again, and I got out here because the price didn't make a trend continuation at that moment. Yeah, it was not happening. You see here, for example, yeah, the price go down, but the buyers came back. The buyers came back and the price went up again. Yeah. Okay, I could trail my stop loss into the profit. Yeah, but I have clear rules about my trailing system for my exit. Yeah. So, and I never fight against my rules because the rules are based on mathematics. Yeah. Okay. So very important. So you see, third rule, a third loss in a row. Was it my fault? Was it the fault of the market? No, it's probabilities. No more, no less. Okay, 3 losses in a row. The next one. Okay, so at that moment, after 3 losses in a row, I said, okay, let's make the entry a little bit lower. That if the trend will continue, then I want to be a part of it. So here, to be honest, I didn't make an entry. Yeah, I did not. But as we can see, if we made an entry here and we trailed the stop loss here, then it would be the loss number 4. Yeah? So I didn't because I have forgotten it. I was in a meeting. I remember I was in a meeting. I have forgotten to make their entry. So no problem. Yeah. But in real, you cannot afford. But maybe this could be the trade who would be running. Or would running. Shit happens. So then again, the price went down, came up again. I made the next entry. I trailed my stop loss immediately, and it was out again. So, and you see here, always the same, always the same. I stuck to my rules. The price the price doesn't want to go down or didn't want to go down. I had no chance. So now, if we try to analyze these things, we have to confess we did not make a mistake. Huh? We did not make a mistake. We stuck to the rules for entry and for exit. But we had 6 losses in a row. That's probabilities. And that's mathematics. So now we have the non-farm payrolls. Yeah, and the price is going down again. And maybe we'll see the next trend continuation. So that's the reason why I have here my stop sell order. In case that the trend will continue, I must be a part of that. Okay, let's come to the next one. You see, it's very, very interesting. Yeah, here it's trend on number 2, but we are in a long extended correction zone. Long extended correction zone. And here is a perfect example from the practice. If you see such things, yeah, then I would never make an entry in the middle of this. Yeah, I can see the trend continuation will take place there, and that's the reason why I always would make an entry a little bit higher. That if we can see finally a trend continuation, that it's going up. Yeah, so this is what we can do. So therefore, I don't have an open position here. And you see the non-farm payrolls were responsible that now the price went down. But I don't know if the price will go deeper because there is a support zone again. So maybe just this phase of this time extended correction, yeah, will continue. And by the way, I cannot go short because it's just an uptrend. New Zealand US dollar. Yeah, lovely, lovely example. As you can see, how cool is this? Trend number 4. I cannot delete this. Can delete this. So this is trend on number 4. And you see there is an entry before the trend will continue. And this is the most important part, that you know how to draw the trend. This is something you have to learn because that's a craft. And then you have to just stick to the rules all the time. And to answer the 5 magic questions, what to do, how, when, where, and why, is the only helpful tool, yeah, all the time to control your emotions. Because the emotions might never influence your rules, never, and never your behavior in trading. Because trading is a game of mathematics. And therefore, you have to just stick to the rules all the time. Yeah? Okay, so there is an entry, but be careful, it's trend on number 2 also. As long as the green trend will not break by breaking through to the lower side, you must be careful because the price is also able to turn around here and go up again. It's always just probabilities, no more, no less. US dollar, Canadian dollar. Here we go. We have a strong dollar again through the non-farm payrolls, by the way. But you can see it was a possibility to go short here from trend of number 2 to 3 and from here also. But actually the price is going up and we have nothing to do. And this is what I call the real freedom in trading, that you don't have to speculate, that you don't have to interpret, that you don't have to gamble. If you have this, if you follow the strategy, buy cheap and sell expensive, if you follow the rules, if you follow the rules all the time, then you know the probability is working for you. But the most important part is that you stick to the rules. That's the most important part. By the way, you should have rules. Without rules, that you know always what to do, how, when, and where, and why, you cannot win. You cannot become successful on a long run. On a short run, yes, possible, but not on a long run. So, and US dollar, Swiss franc, actually there's nothing to do because now we are going into the correction. So we have to wait, turn around, and then we can think about a short. And finally, US dollar, JPY, also the price is still going up. Yeah, we have the correction. Yeah, and maybe there is an entry close to the point 2 to speculate on a trend continuation. Okay, so that was a couple of insights for the market. And finally, I want to explain you a little bit in the last 5 minutes why all webinars based on our webinar today, why basically all webinars are completely useless. Let me explain you this part. So the point is, we come to trading about money. It's always the same procedure. We come to trading because we want to make money. But the development and the progress of a trader is always running in concentric circles. Yeah, in concentric circles is always the same procedure. This is the development of every trader, always the same. From focusing on money to that part, I know what I'm doing with calm and inner balance. Why are all webinars useless? Because webinars are just only an information source. You can watch many webinars here on trading.live, but when it comes to your own trading, you make experiences. And before you can come to that point, you have to make these experiences. There is no shortcut and there is no elevator from this point to the outer point, from close to far away. You cannot use the elevator. It is not possible, which means you have to go all circles, because one experience is based on the next one. Every trade and every thoughts you're thinking while trading gives you an experience. And once you made the experience, you can have a new learning effect. And based on a new learning effect, you make new decisions based on the old experiences, and then you make new experience and new learning effect. This is what we call concentric circles, from inner to outer. When you are an experienced trader, you are not longer focused on money. you're focused on sticking to the rules. You're not looking for the Holy Grail. You're not looking for the elevator. You're just looking for all the time for sticking to rules. So why is it that all webinars are useless? Because if you don't have a mentor, if you don't have an education with a mentor, with an educator who is supporting you and company for many, many months or years, you don't know how to handle your experiences, because the only feedback you get in trading is your account. It's your account. Sorry. The only experience you have is your account. So, and the point is, if you think your account is going up, then you think you make everything right. But if the account is going down, then you think, oh, I make a mistake. And this is the point why you cannot handle your experiences, because the only feedback you get is your account size, up or down. But no one tells you what kind of experience did you make with the last trades. Were the rules there? Did you stick to rules or not? Did you make a mistake or not? Which means you cannot handle and you cannot point them out. Yeah, you cannot judge your experiences, because you only have one feedback, and this is your account. You don't have a person, a mentor, who tells you, look at your chart, there was a mistake. Or the mentor can say to you, okay, you made everything right. That's probabilities. Shit happens. Minus trade are a part, or is a part of your trading. And this is the reason why all webinars you get for free are basically useless. As long as you don't have a mentor just for you, you have no benefit. You can collect information with all webinars. You can acknowledge many, many things, but at the end, you are all alone. Just you and your trades. And that's the reason why it's so hard to become successful in trading. That was my part. Thanks for listening again. Thanks for FXview that they worked with me here. Thanks for Trading Live. And I'm really happy to share my knowledge with you. I hope you learned a little bit. And if you want to know more, then I want to invite you to my homepage, DowHow-trading.com. Of course, also available in English. Yeah, and then you can spend more time with me. You can more interact with me here in my DowHow family. Thank you very much for listening. I wish you a lovely Friday, a wonderful rest of the week, and a cool weekend. And maybe we see each other next week again. See you and bye-bye.